Hi there, welcome back to ET Now. Very good morning. You're watching Market Cafe with me, Kanishka Sarkar. Over the next 1 hour, we'll take you through all the global and domestic cues that you need to watch out for, and also take you through all the stocks that you need to keep on your radar today before the start of the trading session on the D Street. But let's get started with an eye on the globe, and let's see how the US markets fared overnight. Well, Wall Street ended lower overnight, weighed down by losses in the tech sector. Now, the S&P 500 that slipped more than 0.5% after touching a fresh intraday record high. Well, the Nasdaq that fell nearly 1%, dragged by 2.8% drop in Nvidia. The Dow Jones Industrial Average that also closed down nearly 90 points. Now, the weakness came a day after record closes for all these indices, with the street likely booking profits amid stretched valuations that have been flagged by Fed Chair Jerome Powell. Now, on the earnings front, Micron surged over 2% as revenue jumped 46%, boosted by the AI boom and strong guidance that the company has given. Apart from that, the session was overshadowed by concerns around the circular nature of AI trade after Nvidia's big investment in OpenAI raised questions about data center power needs and vendor-style financing risk. So that's how the market fared. But in terms of what to watch out for going forward, now AI-linked stocks, they continue to remain in focus, along with fresh economic data and Fed commentary that could steer the market direction for the US going forward. So that's about the Wall Street, but let's also put the spotlight on the commodity market and see how that is faring this morning. Oil prices, they are extending gains, supported by rising geopolitical risks and tighter supply concerns. The WTI that traded at that $63.72 per barrel level, that's up about 0.5%, whereas the Brent that held near that $68 per barrel level. Apart from that, traders are watching for potential disruptions to Russian crude and diesel flows after drone strikes on energy facilities and reports that Moscow may restrict exports. The US inventory data that has also showed a 3.8 million barrel drawdown in crude stocks that's adding to bullish sentiment for crude. Apart from that, let's also put the spotlight on the yellow metal. Now, gold is holding just below its record highs. Spot prices, they have slipped 0.6% to that $3,794 an ounce. That's easing after a 3-day rally. Now, the yellow metal that remains supported by last week's Fed rate cut, robust central bank and ETF demand, and also geopolitical tensions over Russia. Now, Fed commentary that continues to shape expectations, with Powell highlighting risks to job and inflation as well. And apart from that, Governor Bowman, he has also hinted at faster easing if the labor market continues to weaken. Now, in terms of what we need to watch out for in the commodity market, well, traders are eyeing US inflation data later this week for fresh cues on Fed policy, whereas geopolitical headlines, they will keep both gold and oil in focus. So that's about the commodity markets, but let's get started tracking some more global stories. Now, in a fiery return to the UN General Assembly, US President Donald Trump has accused China and India of being the primary funders of the Ukraine war through their purchases of Russian oil. Now, he repeated claims of brokering peace between India and Pakistan and ending that 7 so-called unendable wars. Now, Trump has dismissed climate change as the greatest con job ever perpetrated. And he's also mocked the UN for a weak response on war and migration, and blasted allies for recognizing a Palestinian state. Now, he even took aim at the UN headquarters itself, joking about broken escalators and teleprompters. Now, like I said, Trump has once again went on a tirade against India and China over the issue of buying Russian oil. Let's listen into his comments coming from the UNGA.
What bad leadership can do to a country. Look what happened to the United States, and look where we are right now in just a short period of time. The only question now is how many more lives will be needlessly lost on both sides. China and India are the primary funders of the ongoing war by continuing to purchase Russian oil.
All right, so those are the comments coming on Russian oil. But Trump also spoke at the UNGA about his tariffs, and that his tariffs will stop wars. Let's listen into those comments.
Russia is not ready to make a deal to end the war. Then the United States is fully prepared to impose a very strong round of powerful tariffs, which would stop the bloodshed, I believe, very quickly. But for those tariffs to be effective, European nations, all of you are gathered here right now, would have to join us in adopting the exact same measures.
All right, so those are the comments coming from Donald Trump. But Sumita Kareer, my colleague, is here joining us now to break down Trump's comments at the UNGA and and analyze what these really mean for U.S. relations with India. Now, after the recent thawing between the two sides, is Trump upping his rhetoric once again? What should we understand from this roller coaster of emotions? Sumita, over to you. What does this really mean for India and U.S. ties?
That's right. Donald Trump's address at the UNGA began by him claiming that this is the golden age of America. Donald Trump supported that claim by mentioning that inflation has bottomed out. He also suggested that gasoline prices are down, energy prices are down. He also suggested that stock markets are doing better than they have ever done, while also speaking about the fact that the United States, during his past 7-8 months since he's been a president once again, have been able to strike historic trade deals with several countries across the globe. But more importantly, he once again took a potshot at India for its energy trade with Russia. In fact, this time around, he's not just attacked India, but he's clubbed India and China. He's hyphenated India and China, and he suggested that both of them are propelling Russia's war. In fact, they're stating that both of these countries are primary funders of Russia's war, and the United States is prepared to impose a strong round of tariffs. He also suggested that he will perhaps be talking today with EU energy purchases from Russia. He also suggested and called on the United States to join US in anti-Russian oil measure, and that UN is funding an assault on Western countries. So once again, Donald Trump continuing with his tirade against India, against China, as far as their energy trade or oil trade with Russia is concerned. Now, remember, this is coming at a time when Marco Rubio, the U.S. Secretary of State, had a meeting with External Affairs Minister Dr. S. Jaishankar, which was seen positively by both the sides. In fact, both the sides agreed to keep the momentum going. They held talks in several sectors, including pharma, including energy, critical minerals, and they also suggested that they appreciate. United States, in an official communication, suggested that it appreciates continued dialogue with India. Marco Rubio once again reiterating that the ties that the United States has with India is one of the most critical relationship at the moment that the United States has. This is also coming in at a time when the Commerce Minister, Piyush Goyal, is in the United States for negotiating a trade deal with the United States side. So how should Donald Trump's commentary be read, given the fact that he, in the past, has softened his stance, but once again has continue to attack India for its energy trade? Will it have a bearing on the trade negotiations that are currently underway in the United States? Well, that remains to be seen.
All right, thank you so much, Sumita, for analyzing all of that for us. But in fact, we also got up with a whole host of experts to decode Trump's commentary at the UNGA. Let's take a look.
I think there are certain red lines that I think Trump now imagines to be there, regardless. So I think that is one. The second is the fact that whether the issue of trade, whether certain red lines can be pushed. I think there India has shown that it can be more conciliatory, that it can really push back certain. It's ready to talk and bring certain conciliations at the table. Because those come with not just, immediate harm, but I think in long term also reformation for India's own economy and economic status. So I think there is a calculus of benefit and cost benefit analysis when you talk about trade.
Well, I'd only like to say that he's living in his own alternate reality, and the reality is that, except for Donald Trump, if let's say a person comes into your house and offers you a terrific job, and another person comes into your house and at the point of a gun burglarizes you, you treat both the same way? China is basically stealing jobs from the United States and from different other countries. China is basically trying to become dominant, and that means overtake the United States. India is doing no such thing. So Donald Trump is the burglar and the friend.
I think it won't make a difference, because at 50% tariffs, those exports will not take place. India will have to look for alternative destinations, and a lot of that is going to be impacted. So going from 50 to 75 is not going to make a difference in terms of the hard realities of the situation. Secondly, equating India and China, I think, is a bit problematic, given that India is a strategic partner of the United States. Our economies have not been in competition with each other. Our economies have been actually complementary to each other.
All right, so that's the latest word coming from experts on what this could mean for India and US ties. But moving on, External Affairs Minister S. Jaishankar has called on the global south to embrace multilateralism as it navigates rising risks and uncertainties. Now, proposing a united front, he has urged nations to leverage their unique strengths like vaccines, digital expertise, education, agriculture, and also small businesses for that culture for mutual benefit. Now, Jaishankar also pressed for climate justice tailored to the South's responsible use of emerging technologies such as AI and the reforms in UN to make global governance more inclusive. So that's the latest word coming from the External Affairs Minister. But shifting focus, French President Emmanuel Macron found himself struck behind a barricade in New York after police halted him for President Trump's motorcade. Now, video on social media shows Macron joking with the officer before phoning Trump directly from the sidewalk, quipping, "Guess what? I'm waiting in the street for you." That's the quote that came from him. Now, the light-hearted exchange quickly turned diplomatic, with Macron using the call to discuss Gaza and other global issues as well. So those are the latest comments that we're tracking, global comments that we're tracking. But moving on, experts believe that there is a silver lining emerging for India's blooming global capability centers, that is GCCs, amid Trump's imposition of H-1B visa fee hike to $100,000. We spoke to Sameer Dhanrajani, the CEO of AI Curate and 3AI on the matter. Let's listen into his comments.
It's a very opportune time for India to really look at ratcheting up the whole pace and momentum in GCCs. We had a head start with 1,800 GCCs comprising of several Fortune 1000 companies, and also with the global push of AI in terms of the next level of R&D and AI-powered enterprise. I think the next rallying cry for India as a part of this whole geopolitical situations and business gyration could be how we can look at catapulting GCCs to the next level in terms of being AI hubs, in terms of being a very top of the line center of excellence in terms of AI. And one of the very, I would say, great aspect for us, which has really worked in the past and also now helping us, is a very seasoned set of tech professionals at scale, which is coming alive.
All right, now moving on, reacting to the US hike in H-1B visa fee, Mukesh Aghi, who's the president and CEO of US-India Strategic Partnership Forum, he has said that the move may actually benefit India. He argues that while Washington seeks to curb visa misuse, the result will be higher pay for Indian professionals in the US and a shift of lower-end work back to India. So let's go across and listen into his comments on how this may actually benefit India.
Indian workers who are coming to the U.S. on H-1B will get much higher compensation as they adopt to the new environment, which is getting the new H-1B. But more important is the low-end work will shift offshore into India mainly itself. So I think even though there's so much hype on H-1B, there is a very minimal damage to India, its economy, and its export of IT services. Yes, it does have an impact on innovations. It does have an impact on startups. But will it impact the economy? No. I think you have a $30 trillion economy, which is quite resilient, growing substantially. So I see no impact on the H-1B price hike on the visa issue. And also, if it kind of curtails certain number of people, the impact will be very minimal.
All right. right, so that's the latest that we're picking up on H-1B visa row. But moving on and taking a look at some macro issues. Now, Organization for Economic Cooperation and Development that has raised India's FY26 GDP forecast to 6.7% while cutting inflation estimate to 2.9% for FY26. My colleague Anurag Joshi is here with more details on this front. Anurag, over to you.
Organization for Economic Cooperation and Development, the Paris-based Intergovernmental Forum, has raised India's FY26 economic growth forecast by 40 basis points to 6.7%. OECD has cut India's FY27 GDP forecast by 20 basis points to 6.2% and also slashed the FY26 headline inflation forecast by 120 basis points to 2.9%. It has cut India's FY27 CPI inflation forecast by 10 basis points to 3.9%. The OECD said that higher US tariffs will weigh on India's exports sector, and India's economic activity is seen supported by the GST reforms. Higher US tariff rates will weigh on exports, and also separately S&P has said that India will be much harder than the rest of the region when it comes to the US tariffs, and this impact will be harder than expected. S&P has forecast India's GDP forecast to hold steady at 6.5% in the fiscal year to March 2026.
All right, so that's the latest growth forecast coming from OECD for India. But to understand more on this, we spoke with Garima Kapoor, economist and senior vice president from Elara Capital, to understand what this really means and the factors impacting India's growth. Now let's listen into what she had to say.
I assess that RBI would like to wait out to actually see how the festive season pans out and also to basically assess the impact of tariffs because remember the 25 plus 25% tariffs that have been imposed on Indian exports, the impact of that is yet to play out because a lot of exports were front loaded in anticipation that the deadline would be met. So in my view, while the chances of an upgrade are ripe, especially after the quarter 1 7.8% print that India got for GDP, I would assess that they would like to wait it out before declaring the same unless they have a clarity on how tariffs are panning out.
All right, so that's the latest on India's growth forecast. But moving on, Federal Reserve Chair Jerome Powell warned that cutting US interest rates too aggressively could reignite inflation risks. Now, speaking during his first major economic outlook since the recent Fed rate cut, Powell pointed to tariff revenues of up to $400 billion a year, noting that costs are largely absorbed by importers and retailers as well, not passed on to consumers. So he's also noted that the US stock prices appear fairly highly valued, even as the Wall Street is at record highs. Now he's acknowledged that equity levels are elevated, but there are no signs of broader financial stability risks. So that's the word coming from him. Let's listen into his comments.
Turning to monetary policy, near-term risks to inflation are tilted to the upside, and risks to employment are tilted to the downside, a challenging situation. Two-sided risks mean that there is no risk-free path. If we ease too aggressively, we could leave the inflation job unfinished and need to reverse course later to fully restore 2% inflation. If we maintain restrictive policy too long, the labor market could soften unnecessarily. When our goals are in tension like this, our framework has long called for us to balance both sides of our dual mandate. The increased downside risks to employment have shifted the balance of risks to achieving our goals. We therefore judged it appropriate at our last meeting to take another step toward a more neutral policy stance.
All right, so those are the latest comments that we're tracking from Jerome Powell. But moving on and shifting focus to another top global story. Now, Super Typhoon Ragasa, the world's strongest storm this year, battered Hong Kong with winds up to 200 kilometers per hour and torrential rain. The city ground to a halt, cancelling more than 700 flights, closing businesses and opening emergency shelters. Panic buying emptied supermarket shelves ahead of the storm, which is now on track to slam into China's Guangdong province later today. So that's the story that we are tracking. One of the top global stories that we are tracking. We'll keep bringing you more updates. But on that note, we'll take a very short breather. Don't go anywhere. More updates coming up on the other side. Hi there, welcome back to ET Now. You're watching Market Cafe with me, Kanishka Sarkar. Well, it's time now to take a look at how the Asia Pacific markets have opened up this morning. Now, most indices on the Asia Pacific, markets have fallen this morning, tracking the Wall Street gains after U.S. Federal Reserve Chair Jerome Powell said that equity prices are fairly highly valued. Now, first up, let's take a look at how ASX 200, Australia's index, is doing. It's down more than 1% right now at that 8,756 odd level. This is after Australia's CPI for August rose about 3% year on year above the 2.9% estimate. So that's the reason, that's one of the factors that we are tracking as far as Australian markets are concerned. Moving on to Hong Kong's Hang Seng Index, that did start in the red, but it has shifted focus and moved on to the green. It's trading nearly 0.2% higher right now at that 26,200 odd level, up about 57 points right now. Apart from that, South Korea's Kospi Index, that's the one that is continuing to trade in the red. It's down about 0.7% right now at that 3,460 odd level. Apart from that, Japan's Nikkei, that is also trading in the red today. It's down about 0.5% at that 45,297 level. That's the Japan index for you. Apart from that, China's Shanghai index, that's the one that did start in the red, but now it has shifted to the green. It's largely flat, just about 0.3% uptick coming in at that 3,834 level. But yes, it has shifted to the green now, so it's swinging between red and green as we speak. Apart from that, the Nifty implied open, that's suggesting a negative start for the Indian market. So yesterday we did give up that 25,200 level and ended just about 80 points higher than the day's lowest point. But right now a 0.3% downtick is what we are penciling in at the start of the trading session on D Street today. So that's about the Indian markets. But while we are expecting a gap down start, let's take a look at how the markets fared yesterday. It was a volatile day of trade as Nifty saw a wild swing between losses and gains on the expiry day. Both the benchmark indices, Nifty and Sensex, they recovered from the day's low during midday, turning positive following a sharp decline, but eventually ending lower only. Now let's go to Snehi to get us the roundup of all the market action yesterday.
Well, yes, we've seen a tumultuous day of trade, especially for the Nifty, because we were very close to breaching that 25,000 mark on the downside. But we've recovered very well from the day's lowest point, but nonetheless managed to close in the red, 25,170 thereabouts. So even below 25,200 is where we've shut shop. Sensex ended absolutely flat with a hint of a negative bias, but it was Nifty Bank that was leading from the front. Good move coming in across both PSUs as well as large private sector banks. Other than that, if you take a look at the breadth of the market, you had mid-cap and small-cap index both in the red, but the small-cap index was lower by about 0.6%, underperforming the overall breadth of the market. Coming back to the Nifty 50 group of stocks, here's a list of all the stocks that did well from that basket. IndusInd Bank up 3%, Axis Bank, Bajaj Finance, JSW Steel, Maruti Suzuki, SBI. So largely banks, metals and autos have done very well. On the flip side, some pressure seen on Trent, Tech Mahindra, SBI Life, Ultratech Cement, HUL, all of them trading with cuts of 2%. Nestle, HDFC Life, Asian Paints also following very closely. If you take a look at sectoral gainers and losers, like I mentioned, PSU banks, metals, autos, they did very well. On the flip side, you have Nifty FMCG, big cuts over there, followed by Nifty Realty, IT, Media, Energy and Pharma that also slipped into the red in the last few minutes of trade. So that is the take coming in on what the market texture looks like. Individual stocks that did well, NLC India was up 5%, Tata Investment on the back of the corporate action was up 11%, Ashok Leyland, Hindustan Copper, Gujarat State, Petronet, Thermax, HPCL, Canara Bank, all of these stocks have done very well. So that was the way the market has traded. All eyes are going to be on when we cross this 25,200 hurdle and when we are able to sustain above that. So, well, yes, all eyes are going to be on what the Nifty does and how it performs.
All right, so that's about the market action yesterday. Thanks, Tehi, for taking us through that roundup. But let's take a look on all the stocks that you need to keep on your radar in today's trading session. And Sharad is now joining us with just that list. Sharad, over to you.
There's a positive development coming in for Swiggy as company will be selling its stake in Rapido to Westbridge and Process for a combined value of 2,400 odd crore rupees, and company has also announced a simplification of restructuring for its Instamart business. Up next, IT stocks, negative reaction expected as the Trump administration has planned H-1B lottery replacement with wage-based system. That means high income and high skilled persons would be preferred for the H-1B visas, and of course this would be a big blow for the freshers. The Indian government is still talking with the US trade negotiators as well regarding the skill issues. Also interestingly, textile stocks would be in focus as a high-level delegation is visiting UK to deepen the trade textile leverage, which is called SEPA. It's a kind of an agreement between UK and India, especially for the export promotion in the textile segment. Also, Bajaj Electricals board has approved the acquisition of Morphy Richards brand and the related IP, and the total acquisition cost comes in at 146 crore rupees, and this will be for the markets of India, Nepal, Bhutan, Bangladesh, Maldives and Sri Lanka. Also from the tech space, positive news flow coming in for HCL Tech as one of the world's largest commercial vehicle manufacturers, which is headquartered in Sweden, has selected the company for AI-powered digital foundation service. So it's actually supportive for the company.
All right, thanks Sharad for that list. But Srishti, now coming to you, which are the stocks that you're tracking this morning?
All right, so firstly, let's have a look at AkzoNobel. This stock is going to be in focus today on the back of a block deal that is likely, wherein Imperial Chemical is likely to sell 5% stake in AkzoNobel via 743 crores of a block deal. The floor price has been decided at a 4% discount at a price of 3,261 odd rupees. So let's watch out for this counter. Other than that, Dilip Bilcoin has also got a positive news flow, wherein Dilip Bilcoin along with their JV has actually won the projects for industrial corridors in state of Kerala worth 1,115 odd crores. So let's watch out for that. PVR Inox will be in focus as well, because some media reports do suggest that Karnataka High Court has actually staged 200 rupees movie cap as a ticket price for cinemas as well as multiplex. And other than that, all eyes will be on Lemon Tree as well. Yet again, a positive announcement coming in as the company has opened the 5th Andhra Pradesh property and has also signed keys prima in Varanasi and select other states as well. And lastly, Minda Corp will be in focus as well, as the company has come out with their Vision 2030, where they are targeting that their revenue is expected to increase 3.5 times to close to 17,500 likely by 2030. Along with that, net debt is also expected to fall to 0.3%, and the company is also looking forward to being net debt free, while ROCE profile is expected to be over 25% versus 20% right now. So all of these stocks will be in focus today. Back to you.
All right, thanks Srishti for that list. A whole host of counters to track today. But moving on, let's also take stock of the cues that we need to keep an eye out for. And Snehi is back with just that list.
Well, yes, lots of important cues to watch out for. Not much in terms of action expected back home, but globally from Japan, because the markets were shut in the previous trading session, you do have numbers coming in from Japan on the PMI front. So that's numbers like S&P Global Manufacturing and Services PMI numbers will be out. Shifting focus back home once again, on the AGMs front, you have Engineers India, GSFC, Vardhaman Textiles, NBCC India, as well as Petronet LNG. So watch out for any announcements, if at all, on the back of these AGMs. In terms of the primary market, action continues here. You have one listing, 3 IPO openings and 2 IPOs closing. So watch out for that. VMV TMT IPO will be making its D-Street debut. On the flip side, EPAC Prefab Technologies IPO, Jain Resources Recycling IPO and BMW Ventures IPO. These 3 will be opening, and Ganesh Consumer Products and Atlanta Electricals. These 2 IPOs will be closing. Now, not much to watch out for in terms of corporate action and board meetings, but in terms of some other events, keep a very close eye on San Francisco Fed President Mary Daly's speech. She is going to be speaking at an event, and this could have some major cues in terms of her outlook of the economy, where US inflation is headed, any idea on what the policy action going ahead could be. So watch out for that and all of these cues very closely.
Okay. All right, so those are the cues that we need to track today. But on that note, we'll take a very short breather. Don't go anywhere. More news and updates coming up on the other side. Hi there, welcome back to ET. Now you're watching Market Cafe with me, Kanishka Sarkar. Well, now let's put the spotlight on the retail space. Now, Q-commerce and e-commerce platforms, they've dialed up discounts as festive fervor takes over. In fact, Amazon and Flipkart posted record sales on the first day of sales. My colleague Anjali Palod is here with all the highlights there. Anjali, over to you.
Right, well, it's that time of the year with the biggest e-commerce companies unveil their flagship sales. Amazon and Flipkart started their respective flagship sales for all of their users on September 23rd. They had given early access to their loyalty members on September 22nd. But now these are going to be the sales that will see the highest offers coming in from both of these companies, as well as all other quick commerce companies that are also going big on discounts this festive season. The categories in focus this time around are electronics, phones, daily essentials, as well as beauty. And with the GST rate cuts coming in, that is also something that is prompting people to shop more. In fact, across e-commerce websites, we can see call-outs for customers to make the most out of these GST benefits, with the GST benefits being highlighted on individual products as well. So both the e-commerce companies and a bunch of quick commerce companies are gearing up for a festive season with a bunch of offers. However, some customers did point out the price discrepancies and automatic cancellations on Flipkart's for the Big Billion Days, where prices that were shown in advertisements were not what was found on the website, as well as automatic cancellations that were done by the company or at the seller's end, that led to a lot of annoyance at the end of the customers. The social media is flooded with such complaints as well. But taking a quick look at quick commerce, now quick commerce companies are going all in on discounts this festive season, now that we have more than 3 players or more than 4 players as we had in the previous years. Given all of this, Swiggy in fact launched the Quick India movement, which started on September 19th and will continue till September 28th. Now this is the first instance of a quick commerce company having a long drawn festive sale similar to what we see on e-commerce websites previously. Now this is the first instance we're seeing something like that happen in the quick commerce world. In fact, on September 20th, which was the first day after Swiggy Instamart launched this sale, they came out with some numbers. The overall orders crossed their highest ever volumes by the end of the first day of the sale. Smartphones and phones order grew 20x in the first 2 hours of the sale, and earbuds also saw a 30x growth. So clearly electronics is will remain the focus. We also saw some sales coming in from Zepto, which ran the fastest sale ever from September 11th to September 20th. In fact, Flipkart Minutes also participated in its parents' Big Billion Days, and some numbers coming in from the first day of that sale. They participated in their parents' early access to the Big Billion Days sale. They recorded over 45 lakh unique visitors on the platform and a 2x rise in order volumes, and the highest selling item on Flipkart Minutes was the iPhone 16. Now, as per some data, the e-commerce sales are expected to surpass 1,20,000 crore rupees, and that's a 27% growth from previous year in terms of e-commerce sales. And out of this, quick commerce is expected to see about $1.6 billion of sales in this festive season. So those are the key expectations that we were penciling in, and the early sales data from all of these quick commerce and e-commerce companies also signal towards a festive season that is going to see a big growth in the order volumes as well as the sales growth.
All right, so that's about the e-commerce sales data. But Anjali, stay on with us. We're also learning that Swiggy is all set to sell its stake in Rapido in a deal worth about 2,400 crores to Process and Westbridge Capital. What are the other details that we are gathering here?
Swiggy's board has approved the sale of its stake in Rapido 11.8% to Westbridge and Process. Now this will involve a total deal size of around 2,400 crore that will be added to the company's coffers. The first deal, which is with Process, is about a 1,968 crore rupee deal, wherein Swiggy will sell 10 equity shares and 1,63,990 Series D CCPS in Rapido to process, and as a part of the second deal, Swiggy will sell 35,958 Series D CCPS to Setu AIF, which will be a cumulative 431.5 crore rupee deal. This puts the entire valuation of Swiggy's stake in Rapido to 2,400 crores, a stake that Swiggy bought back in 2022, and Swiggy is going to receive a 2.5x return on that investment. Now, Swiggy has earlier spoken about the rationale behind this stake sale, given that Rapido has now entered the food delivery business, meaning that this would become a direct conflict of interest with its investment in Rapido, which is why the company has gone ahead and divested its stake in Rapido, which has launched its own food delivery arm called Only. However, that's not the only update that came from Swiggy. Another approval that came from the board was for the sale and transfer of the quick commerce arm of Instamart to its subsidiary. Now, Swiggy is having off its quick commerce business Instamart, which will be transferred to Swiggy Instamart Private Limited via a slump sale. To give you some context, Instamart contributed over 2,000 crore rupees in revenue in FY25, which is about 24% of the standalone revenue for Swiggy. However, the net worth of Instamart undertaking stood at a negative of around less than 300 crore as of March 31st, 2025. Now, by doing this slump sale, there is not going to be any difference operationally, but as per a statement that has come from a Swiggy spokesperson, Instamart has emerged from the shadow of Swiggy's food business to become a standalone brand. That is the rationale behind this sale and purchase. Now, the subsidiary structure is designed to support this growth momentum by providing sharper strategic focus, operational flexibility, and enhanced transparency, while ensuring full ownership remains with the listed parent company. That's the statement coming in from the Swiggy spokesperson. So those are the two big updates from Swiggy. One is the stake sale in its stake in Rapido, and the other is in Swiggy having off its quick commerce business into a standalone subsidiary.
All right, thanks Anjali for all those details. On that note, we'll take a very quick break. Be right back with more news and updates coming up on the other side. Hi there, welcome back to ET Now. You're watching Market Cafe with me, Kanishka Sarkar. Well, one of the stocks that we'll be tracking today is Minda Corp, as the company has released its Vision 2030 targets with an aim to triple revenue and become nearly debt-free. Srishti is here to tell us and take us through all the details that are there in the company's Vision 2023. Srishti, over to you.
Well, yes, Minda Corp has come out with their Vision 2030, when they have set quite an aggressive target in terms of the revenue growth. Almost 3.5% jump is what they are targeting, 17,500 crores on the top line. But that is expected to be supported by the passenger vehicle segment contribution increasing in the times ahead, specifically because passenger vehicle segment, for now, it's a 14% contributor. That's expected to grow up to almost 25%, while the two-wheelers and three-wheelers contribution and the mix, overall contribution in the mix, is expected to come down. But along with that, the company is also targeting an improvement in the margins to 12.5% by 2030. The net debt to EBITDA ratio is expected to come down to 0.3%, while the company is also aiming to be net debt free. Along with that, in terms of the kit value, that is also expected to increase. The company has set along with its capex plans, and some of the new order wins are also something that the company is targeting out for. The premium drivers could be the smart access, EV products, and cockpit electronics, where the company is targeting to increase their revenue substantially, and the company is also targeting to increase their export basket as well. So yes, of course, Minda Corp will be in focus on the back of their Vision 2030.
All right, so Minda Corp is a stock that we'll be tracking today. Thanks, Srishti, for all those details. But with that, we're completely timed out on this edition of Market Cafe. I'll take your leave, but don't go anywhere, as the market will take all the action forward.